purchased furniture and equipment costing $30,000. A cash payment of $8,000 was made immediately, so that's like a down payment. And then the remainder will be paid in 6 months. So the remaining balance will be paid in the future. So going through this process of analyzing the transaction, we have to identify which accounts we will use in our entry. You said what?
Accounts payable.
Accounts payable is one. Okay, and what's the normal balance of that?
That's going to be credit.
And is it going to go up or go down?
That's going to go up.
Let's see.
Am I right?
Can you tell me another account?
Cash.
Cash. Okay, and what's the normal balance of cash?
Debit.
Debit. And is cash going to go up or go down in this transaction?
It is going to go down.
It go down? All right. Now there's one more account. And what's equipment? And we're going to put the furniture and the equipment in the same account. Now equipment, what would be the normal balance?
Debit.
Okay, debit. Now is the equipment going to go up or go down? Up. So any questions on these three different accounts? Any questions on why it increases or decreases or why not the other way? Yes.
It's not a notes payable instead of accounts payable? Because it's
Right here, it's going to be accounts payable, and it doesn't say that it signed a note or anything like that, but yeah, it should be accounts payable unless they specify signed an actual note. Because they have to sign a promissory note, and it'll actually have interest on it if it were something other than that. What would actually happen. So, now, if the notes, accounts payable has a credit normal balance, it increases, are we going to debit or credit it? If it increases, it's the same side as the normal balance. The normal balance means the side that increases. So we're going to credit. Okay, what about cash?
credit cash.
Now we're going to, it decreases, so it's the opposite of the normal balance, so we're going to credit cash. And equipment, we're going to debit equipment. Everyone see that? So, time to record the entry. And this date is on May 1st as well, so we're going to put down May 1st. Now, which of these accounts do we list first?
Furniture and equipment.
Okay, we're going to list the account that's debited. So we're going to debit equipment, and we're going to list it first. Now for equipment, how much did the equipment cost?
$30,000.
$30,000. So that's the amount of our debit. Any questions on that? Now what we do next is we're going to list accounts payable or cash. Either way, it's okay. It doesn't matter. I don't know about Wiley Plus in terms of, I think it's supposed to be order of magnitude. They may allow you to have dual solutions, but so long as you indent both of them, you're fine. So I'm going to go ahead and list the cash first because I know the amount. So I'm going to put cash as our credit. Now how much cash do we pay down? $8,000. So that's going to be on the credit side. And are we in balance? No, we're off. Okay. So we're going to list the accounts payable right underneath the C for cash. So you don't indent again. You're going to put it flush to indicate that this is a credit. So accounts payable. And how did you get 22,000? Okay. It has to equal. So you subtract the 30 from the 8. So that'll be 22,000. And that will make sure you are in balance. Now this is an example of a compounded journal entry versus the one from above and the first one. Those are simple journal entries. Simple journal entry is just one debit, one credit. Compounded is multiple, more than what, 2 accounts, so 3 or higher. I've seen some companies that may have a whole page for one journal entry because they have so many different accounts that are involved in a transaction. But so long as your debits equal your credits, you're good. Any questions? Let's try one more. May 1st, item 5, paid $1,800 cash for a 1-year insurance policy on furniture and equipment. They bought an insurance policy. Can you tell me one of the accounts we used?
Which one are we on?
5.
Prepaid insurance.
Okay, prepaid insurance, an asset similar to prepaid rent. So this isn't prepaid insurance. We're paying for the insurance in advance.
When you have different insurance, do you name them furniture and equipment prepaid insurance?
Yeah, more than likely it would be
Prepaid
better if
insurance.
they say prepaid insurance for the rent or prepaid insurance for the equipment.
Okay.
Because each policy might be a little bit different. Liability insurance, so prepaid insurance for liability, you'd have one, or for auto, yeah, it would make more sense to have multiple account names. Or you can either put it in the detailed explanation if you don't have a significant number of policies, and you can still track it that way. Okay. Next person behind Ricky? Cameron, okay. Can you give me another account? Cash. Okay, any other accounts? Okay. Now, it's prepaid insurance. Is it going up or going down?
It's going,
It's going up, and I forgot to identify the normal balance. Prepaid insurance is an asset, so the normal balance is what? Debit. Okay. Now, cash normal balance is also debit. But is cash going up or going down for this? Down. Okay. All right. Everybody got it? So, are we going to debit or credit prepaid insurance? Debit. And are we going to debit or credit cash? Credit. So our journal entry, May 1st. Which one do we list first? Prepaid insurance. How much? $1,800. And I know my credit has to be $1,800. And cash is credited, so we're going to indent for $1,800. So now you should be able to do 6 through 12, right?
yeah.
What?
6 through 12. You can do it. I know you can. Make sure that your debits equal your credits. You have a question? Okay, so after you post to the general ledger to each individual account, the next step will be to prepare the trial balance. First, you want to start off with the name of the company, the name of the report, and then for the date, you can do as of, or you simply can just put down May 31st, 2012, or 2014, whatever the year in. I don't remember what it was for problem 2-3B. So you do the heading. Now the very first account, which account are you going to list? Cash. So the assets are listed first. So we're going to have cash. And we're going to have a debit and a credit column. And what that means is you're going to go to your general ledger. You're going to figure out the balance of the cash. You're going to add up all the debits, add up all the credits, and get the difference between the two. Does anyone have that number?
20,450.
Have that over.
20,450? Okay, let's try that. So 20,450 is what we think we have for cash. So we're going to debit cash for 20,450. Okay, the next account we're going to list is accounts receivables. accounts receivables, AR. That has a normal balance of debit, and we figure out the account balance, it should be what?
9,000.
9,000 on the debit side. Next account we have is prepaid rent. And prepaid rent, what's the balance? How much? 24,000. Next one we have is prepaid insurance. And that was what, 1,800? Then we had office supplies or supplies. Either name will work. Supplies were how much? 2050, so 2,050. We also had equipment. How much is equipment? Let's see. How much? 30,000. Okay, are there any more assets? Okay, no, let's go with the liabilities. First one and only one we have is accounts payable or AP. And the amount for that one is 2160? 23,160. So $23,160 for our accounts payable credit balance. Okay, any more liabilities? No. When we don't have a retained earnings, we do have a common stock account. How much? Okay, common stock, 50,000. Okay, next account we have is service revenue. And how much is that? 20,000. And then we have what? Utilities expense. How much? 260, and that's on the debit side. And then the final expense account will be salary and wages expense. And that 2 is on the debit side. Is how much? 5,600. 5,600. We're going to do a single underline underneath the debits, single underline underneath the credits. We're going to calculate a total, which is a grand total. And whatever number we get, we're going to put 2 double underlines underneath. And hopefully everything will equal 93,160 is what I got. And I'm hoping our debit is that amount as well.
It is.
And you're going to put the dollar sign underneath the last number. And we are done.